We're back on Morning Trade Live. If you're feeling frisky today, open that Amazon app on your phone and try to find a deal. Amazon's latest Prime Big Day deals, or Big Deal Days, I should say, getting my words mixed up. The event is underway and runs through tomorrow. Shareholders are hoping for a pop in the stock. Shares are flat this year and lagging the rest of the AMZN stock. So let's go inside out on Amazon. Joining us now, very pleased to say, Francis Stacey, economic strategist, Scarlet Oak Financial. How are you looking at this sales event? I mean, no doubt good for sales, not fantastic for margins, but overall, we do like to look at this event and what it means for the company.
Well, what this event means for the company is that they get a head start on the holiday shopping. So they get a head start on all of those Black Friday deals where they have a lot more competition. And there are estimates that this could increase its holiday spending from last year up 6.2%, which really helps. Yes, correct, not good for margins, but these Prime Days have been huge revenue boosters. And then there's sort of this subset of influencers that picks these deals, and it's just a lot of buzz, and it's just a jump on the holiday season.
Yeah, and obviously it's a good barometer for us to keep tabs on the sort of health of the consumer, particularly as they are worried about jobs and inflation right now, whether we will see some of that, pull forward, getting in early for that holiday shopping, to your point there, Francis. Just wondering, looking at Amazon as a whole, I had a guest on a couple of days ago who said it was a bit of a head scratcher as to, why this stock has been sort of underperforming the rest of its sort of AMZN peers. Have you got any thoughts on that?
Yeah, well, the thing about Amazon is it's kind of old faithful when you talk about traditional cloud services, but it's been a bit of a laggard in the AI participation. So its investment in Anthropic has been significant. Obviously, they've done a deal with Deloitte, they've done a deal with IBM, and that's huge. And Claude is growing in its market share. And so the fact that Anthropic is kind of making some noise and Amazon is investing in that is bringing Amazon into that sort of up and coming AI conversation. So Amazon's stock price has been kind of trading based on more traditional metrics and hasn't been part of the AI bubble. But now I think it has an opportunity to catch up. And just looking at the chart here, we've been a bit range bound between 216 and 224, trading at 222 right now. So I think that if we can hold these higher lows here, and we can particularly hold the August 4th low, I think that Amazon's got some room to run as an AI play that might be a bit discounted.
Okay, I'm just wondering what else would sort of offer a bit of a tailwind for a move higher. I mean, everybody when they talk about Amazon does like to obviously talk about the rest of the sort of revenue drivers. People talk about AWS as well. I'm just wondering what else you're seeing there as far as what could drive the next sort of leg of gains.
The thing that I'm really looking at, because you've got all of that in the backdrop, obviously it's a very solid company. I'm just looking at the consolidation and the trading pattern, and the consolidation is really a higher low if you're looking at a 6-month chart or a year chart. And so if we can hold this level from a technical perspective, one of the reasons that the AI bubble has reached such epic proportions is because we have a record amount of liquidity in the system. And I also think that that's why, we're being buffered in the market so far from the government shutdown. So there's so much money in the system. Granted, it's not divided equally. We have a bifurcated economy with an inflection in, sort of defaults in autos and credit cards and things like that. But the consumer that is spending and has access to credit is very active. So that's all going to support the story with Amazon. The Fed's lowering rates. Obviously, that's just sort of, some kind of a tailwind. The other thing that was significant is the FTC did make that decision that was going to ding Amazon $2.5 billion. That came out on September 25th, and that really hasn't, created new lows from a technical analysis perspective in the stock. So all of these things look pretty positive in the short term for Amazon.
Okay, thank you so much. Always appreciate your time. Francis Stacey, economic strategist, Scarlet Oak Financial. Thank you so much. Let's trade it now with Tom White, host of Fast Market. A pair of example trades for Amazon. Let's start off with your first, which is Bullish. What are you seeing there, Tom?
Yeah, we got two bullish trades, but we're going to kind of look at the trade-offs between the two. The first one's going to be a little bit more aggressive. They report earnings that last week of October, so we kind of want to avoid that earnings event. So we went out to the October 24th weekly option series, so 17 days to expiration, short-term positioning, where I'm going to buy something slightly in the money, I'm going to buy the 220 strike call. It's got the higher delta. It reacts more like the stock. And then against it, to offset some of the costs on that bullish call purchase, we're going to sell the 232.5 strike call. So a bullish $12 wide, $12.50 wide call vertical, you're going to pay roughly about $4.60 debit. Might be a little bit higher than that right now, but the debit you pay on this spread, $4.60, is going to be your risk, right? $460 per spread. That can expand to 12.5 if it goes above 232.5 into expiration over the next 2.5 weeks on this one. That break even, if you pay a $4.60 debit, $224.60. That's about only just over 1% above the current share price in there. So you don't need a massive move on this type of trade, but it's more aggressive. You do need to move higher to be profitable on this. And the risk reward setup pretty good on this first aggressive call vertical purchase.
Okay, that's the first. So what's your second example trade for this one? Looking at a little bit more sort of neutral to bullish there, Tom.
Yeah, a little. It's still bullish, but a little bit more passive on this example trade. We're going to still use that October 24th weekly cycle because anything can happen on earnings, but maybe you'll get that run up into the earnings event. So using that same October 24th weekly cycle, we're going to sell an out-of-the-money put vertical for a neutral to bullish stance where it gives ourselves a better probability of success. So selling the 215 strike put, that's out of the money to the downside from the current share price. And then against it, because we want to stay risk defined, we'll buy the 205 strike put. So a short $10 wide neutral to bullish put vertical. Now you're going to collect roughly about a 210 credit, might be about $2 right now, but the credit you collect is what you can make. So on this $10 wide spread, I can only make about $210 per spread with about $790 in risk. But my break even on this, where I start to lose money, is all the way down at $212.90 to the downside over the next 2.5 weeks. And that probability that that short 215 strike will be out of the money at expiration, which is what you want. You want this to go out worthless. It's about 68% probability that that short strike will be out of the money at expiration. So you can see the difference between the short put vertical and the long call vertical. On this one, I'll profit, the short put vertical, I'll profit in 3 out of 4 scenarios if the stock goes higher, stays where it is, or even goes lower and I'm wrong, but remains above that $212.90 break even to the downside. So those are the trade-offs, but they're both bullish trades.
Okay, a pair of bullish trades there for Amazon, sitting up slightly perky today in what is otherwise a pretty flat old market today. Thanks so much for that, Tom White. Really appreciate your time. I'll catch you a little bit later.